Hey guys, this is Keliah with Southern Regime. A lot of you have been emailing me about trust. I am not qualified to coach you or teach you on trust information, but I do have a gentleman that is, Cedric Brown with Trustup. I actually learned more about him through a mentorship that I'm in, Recession Proof. So today he's going to give you a brief introduction to how trust works, the elements that are the most powerful, why they're beneficial, and then I'm going to ask him some questions that you guys have been asking me. So, Mr. Brown, you have the floor.
All right, well, it's definitely a pleasure to be here today. I got a wealth of information. I am a trust specialist. I am the owner of Trustup. You go to Trustup.Biz and check us out, see what we're really all about. But basically, I want to tell you what a trust is and how it can benefit you, and how when I look at the 1%ers, the most wealthiest people in the world today, they actually operate through a trust. A lot of us are trying to obtain wealth and riches and so on. Based on my way to Killeen, Texas right now, looking at buying another Mayweather boxing and fitness gym for the particular trust that I control. See, let me tell you, a trust is nothing but a contract. The United States Constitution allows you to do a private contract, okay? So if you don't have a copy of the Constitution, shame on you. You need to get one. You don't know your rights. But a trust is an agreement. And the particular trust, though, that I'm going to talk to you about today is very special. All trusts are not created equal. In the world today, when you get a trust, that private agreement to manage property for someone else, because that's really all that it is. I would say 99% of trust are what you call revocable trust, and 99% of trust are called they're grantor trusts. I mean, you granted that trust to come to life. But since I stated all trusts are not created equal, I'm going to tell you about a trust today that was created in 1999 in Fort Worth, Texas, by a judge, CPA, and an attorney. It took over 12 years for them to perfect this trust to do what I'm going to tell you it can do for you, and you definitely need what this trust will do for you. Number one, this trust is a spendthrift, non-grantor, irrevocable, complex, discretionary trust. And it meets a special IRS code called 643A through B. Now, I know it's a lot of information, but each one of those components means something. If you Google spendthrift, it means that it's I guess you could say a clause or a part of a trust that stops creditors from being able to penetrate the trust. It also allows you to be able to put stipulations and regulations on beneficiaries. A lot of us have prodigal sons and daughters, and we want to keep them as a part of our estate, but we don't want them to squander their wealth. So that spendthrift provision is important. Non-grantor, that's very important also because, see, like an LLC, a C Corp or S Corp or a partnership or a will or a nonprofit, you are the creator of those entities. With this particular trust, you are not the creator. You either select what you call a settler. That's a third party that will create this trust, but no one can never say that you created the trust. No one can say that you own a trust, because once this trust is created by that settler, they're going to appoint you as a trustee. And when they appoint you as a trustee, they're going to resign. So now you're going to actually have the power to control this entity that you didn't create. A lot of times they file a lawsuit against your LLC. They're going to sue you. You're the creator. If you create a will, and something should go wrong, well, they want to challenge their will and so on in the court of law. Well, one good thing about you not being the creator here, and you actually taking over something that someone else has created. See, let me tell you something. See, spendthrift and non-grantor, those two components are very important. But the most important component, that this trust is irrevocable, not revocable. Revocable means you can revoke that trust and end it at any time. Revocable means you can put your property in the trust, and you can take your property back out of the trust. But see, with an irrevocable trust, that's not possible, because once you endow and give your property away, you can give your property away to anyone, to a homeless person, if that's what you want to do. There's no law that can stop you from doing so. So give it to this trust now that you did not create, but now that you only control. When I say control, you have the power to get the EIN number for this trust. The IRS has already vetted this trust, checked it out, and they give EIN numbers for this particular type of trust. All right. Now you got the power also to get the bank account once you get the EIN number, because the banks now, their legal team has also vetted this trust. Keep in mind, now we got over 30,000 people operating this way. So spendthrift, non-grantor, and irrevocable. Now let's talk about the tax advantages that you get with this trust that you can't get with no other vehicle. A lot of people have an IRA or a 401k, and it allows you to defer taxes. But at some point, you have to make a distribution. At some point, you have to start paying taxes. But see, with this particular spendthrift, non-grantor, irrevocable, complex trust, your complex, that's not only a tax provision. It don't mean that the trust is complex. Most trusts are simple. I mean, you simply have to make a distribution. You simply have to pay taxes each and every year. But if the trust has a complex provision, you don't have to make a distribution, and therefore you don't have to pay taxes. That's a great benefit. All right, that's awesome. That means you get to defer taxes into perpetuity, and that means what? Forever. That means for generations to come. All right, that's a sweet deal, you know. And then the last part of this trust is a discretionary provision there, giving you more power than the court system, giving you more power than the IRS to make all decisions. You don't have to answer to no one, you know, but you get to select who, you know, the name of the trust. You're going to name it. You're going to tell us who the trustees are, which I'm sure you're going to be one of them. All right. You get to tell us who the compliance steward is, what that person does in the event of your death. And you have appointed successor trustees. The compliance steward can step in and make sure those successor trustees are doing what you want them to do, because you're going to leave instructions in that particular trust. But what they are to do with those assets is they manage those assets for the beneficiaries. You get to determine who the beneficiaries are. And a lot of times that's going to be our children and our grandchildren, all right? But it can be a person, it can be a place, it can be a thing, it can be an organization, a nonprofit, or whatever. But you have the power to add and remove beneficiaries. You have the power to add and remove trustees, and you have the power to add and remove compliance stewards. All right. So that's heavy. That's giving you a lot of power. But see, you need that power because, see, with this particular trust, no judge, I said no judge or no court system whatsoever have jurisdiction. So that means you can't sue it. So if the trust owns your assets, that means no one can ever get to it. The trust itself is not on any search engines whatsoever. So it's very private. And privacy is your best protection whatsoever. Because what they don't know, they just don't know. And it's not their business. You may be a very public person, but your business, you should have a very private business philosophy. And the trust allows you to do so. You know, we have people like the Rockefellers, you know, they started operating with the Standard and Oil Gas Trust back in the 1800s. You have kings and queens back in the 1200s that operate through trust. Have you ever heard of a king get sued? Have you heard of a king or a queen paying income taxes? And you know what? They leave an inheritance to their children's children for generations to come. And kings and queens still exist today. My question to you, are you one of them? All right. You know, our good Lord said, the world is mine, the fullness thereof. And that means you cannot really own anything. All right. So don't start thinking that you do, because you really don't. You know, you can have your home paid off. But if you don't pay the taxes, I promise you it will get foreclosed on and you won't own it. All right. And same with a business. If you don't keep your good standing up and keep your corporate paperwork up like you should and so on, hey, they can basically shut your business down. All right. Now you think you own it, but see, really you control it, but they're controlling you. See, in America today, you're either going to be a W-2 employee, you're going to control an LLC, a C Corp or S Corp, or a nonprofit corporation. All right. Those are all governmental entities. You are a governmental entity. When you were born, they gave you the social security number, and they also gave you a birth certificate, and they put you in an education system, and they told you to go get more education. Then they showed you can get that good job. All right. Will you trade your time for money? I'm sure a lot of you are doing that. You probably don't want to do it, and you don't have to do it. Okay. Because there's a better way, people. All right. See, the secrets to wealth and success, you know, Nelson Rockefeller, he was the 41st vice president of the United States of America under Ford. He was appointed. And he said, at his time of death, before he died, he's worth over $1 billion. But he said, the secrets to wealth is to control everything, but not to own anything. But what they didn't tell us, how do you do that? All right? Do you do it with an LLC, a C Corp, or an S Corp? Absolutely not. Do you do it in your personal name? No, you don't. Okay. So wealthy people control everything, but they don't own anything utilizing these specialized instruments, using these special 600 and 700 codes of the Internal Revenue Code. Do you have a copy of the Internal Revenue Code book? And if you don't, shame on you. That means you leaving your faith and your destiny to someone else, like a CPA or a tax preparer, okay? Or maybe even an attorney, all right? I want you to understand, an attorney is licensed with the state and he practices law. I said practice, no guarantees. Win, lose, or draw, he's gonna win. You may lose, you may win, but it just depends. All right, and it's gonna cost you, $400 or $500 an hour. All right, but one way you can do this, you can eliminate lawsuits by eliminating all assets. If you don't own anything, nobody can take anything from you. If everything that you used to own or going to control in the future is owned by this particular spendthrift, non-grantor, irrevocable, complex, discretionary trust that cannot be sued because no judge has jurisdiction, you are in a great position. Huh? I mean, it's like a titanium vault to protect your assets. All right. Let me tell you something. Since no judge has jurisdiction, if you're not married people, this trust serves as a prenup. And if you are married, you better stay together once you trust up, because if you decide to divorce, you cannot bring those assets into a divorce. And you know what? When you die, there's no probate. See, there's no estate taxes. All right. And see, now if the trust owns businesses, you get to now let that business make all the money that you want to make right off the expenses. And the profit goes down into the trust now, the true owner, as an extraordinary dividend, and you do not pay income taxes. But the trust has expenses. It has to maintain the properties that you have, that it owns now. It maintains the automobile, that it maintains, it takes care of the children, their school, clothes, food, education, vacations that you need to take them on. So only thing you need money for now is food, fun, and fashion. Wouldn't that be a great world to live in? You don't have to worry about auto insurance, life insurance. If you got life insurance policies, contact your insurance agent. The trust now becomes the owner and the beneficiary of insurance policies. And those that, you in crypto, get ready, because the IRS, they're already in motion to try to raise capital gains from around 20% currently to as high as 45%, depending on where you live. That's something you need to think about. That's almost 50% of your profit. Same with you guys that's in real estate. You buying, fixing, and flipping, and building and selling. I'm talking about zero capital gains. I'm talking about no 1031 exchanges. People, you better hear me. All right. This trust will change your life for right now and also for generations to come. All right. Now, you say, well, I never heard of this before. This must be a scam. Do you think that the IRS is going to assign an EIN number to something that's going to let you scam? Do you think that banks are going to let you open up bank accounts with something that's going to put you in a position where you can do something illegal? Let me tell you something, people, that's not about to happen. You say, well, I'm going to talk to my attorney about this. Well, you can try to talk to your attorney about this, but chances are they're not going to know about this trust. They're not going to know about these provisions. All right, your attorney don't want you to become lawsuit proof and judgment proof. All right, because if you do that, he's out of business. See, an attorney wants to sell your estate, but if you don't have an estate and it avoids probate, well, they don't get involved. You don't have to worry about your family fighting. All right, this trust also puts you in a position to avoid probate, puts you in a position also to deal with your medical directives. Don't leave that burden on your family. All right. Now, it takes about 5 to 7 days for the law firm to create your trust. You're going to tell us the name of the trust, who the beneficiaries are, who the successors are going to be, who the trustees are. All right. We have sophisticated enrolled IRS agents to give you a tax strategy. All right. And as we restructure your business, you may need to convert your C Corp and your S Corp to an LLC. Just unincorporate all together. Let me tell you something, people. They created some new laws that went into effect here in January. And in January, they got a law out called the Corporate Transparency Act. And let me tell you about that. And you need to Google that if you hadn't had a chance to look at it. If you own a business in the United States of America, this year, you must turn your information into FinCEN. That's the Financial Crimes Division of United States Treasury. Okay, so I need you to Google Corporate Transparency Act. All right, if you have any business, LLC, a C Corp, or S Corp, FinCEN wants to know who the owner is, what percentage you have. They want your ID. They want a copy of your passport. They need to know everything about every business in America today, on top of what the Secretary of State already has. So they got a check and balance system that they're putting in place. And let me tell you something, if you don't comply, they're going to fine you $500 a day up to $10,000 for each and every business. I said each and every business now, LLC, C Corp, or S Corp. The only way that you're going to be exempt from that, you need to be making $5 million, or you need to have at least 20 employees, or you have to be a nonprofit corporation. Other than that, you must comply. If you don't comply, $500 a day up to 10 grand, and then you can get up to 2 years in prison. That's right. So I tell most of my clients, unincorporate. Yes, I keep an LLC to do what? To do business with, to market, and basically to be that duck on top of the water. And also I use that LLC to go get the money, other people's money. During the pandemic, who did the banks give the money to? Did they give it to individuals? No, they gave it to businesses. But your business had to be lender compliant. And there are several things that you need to do to make your business lender compliant, such as you need a business address, not your home address. You need a business phone number registered with 411. Okay, you need business checks with that business address and business phone number on those business checks. Okay, all right. You need to be registered with Dun& Bradstreet. You need to be registered with Experian. All right. There's several things, about 22 things that need to be done to make sure you lender compliant. You need a little age on your business too, at least 2 years. Being in existence. Or you may want to consider purchasing an existing age LLC. Okay, so there's many things you can do, but bottom line, go get the money. All right. Now, a good man or woman leaves an inheritance to their children's children. Are you good? Are you in a position right now to leave an inheritance to your children's children? You say, well, I have a will. That's not how you leave an inheritance. A will is nothing but a ticket into court. So the court system and attorneys can basically get your family fighting and start charging you billable hours to your estate. You got to look at probate. You got to look at estate taxes, and it could take years. I look at famous people such as James Brown. He was king of soul. No will, no trust, got in trouble with the IRS. I look at Aretha Franklin. No will, no trust, got in trouble with the IRS while they were living. Hey, I look at Martin Luther King. No will, no trust. Believe me, and this estate still going on today, and they're fighting with royalties and so on. It's coming in, So the list goes on and on. But then I look at people like Senator John McCain, worth over $4 million at his time of death. Number one, how can you get in a position to be worth $400 million? Okay, Bob Dole, $400 million. Colin Powell, $60 million. Let me tell you something. They had a funeral. You never heard about them in court, probate. You never heard about taxes. You never heard about none of that. So what do they know that you don't know? Well, now you do know. You know about the spendthrift, non-grantor, irrevocable, complex discretionary trust. Google IRS code 643, A through B. All right, all the information that I'm telling you is in black and white. And all you got to do is get the wisdom and knowledge, and then you apply it, and your life can change for generations to come. All right. So number one, you should not be in any personal debt whatsoever. I know a lot of you play those credit card games to try to get those points and all that kind of stuff. But you know what? God said that you should owe no man. Now, God said that the borrower becomes the servant to the lender. But he didn't say anything about an LLC or C Corp or S Corp. They can owe everybody. Look at Donald Trump. He filed Chapter 11, which is business bankruptcy, 7 times and became the president of the United States of America. He's the epitome of business. You may not like his personality, but you have to love his business philosophy. He's taken the laws of the United States of America, and he's maximized those laws, worth over $2.5 billion in assets that he has control of today. Now, what about you? What are you going to do? Are you a good man? Are you in debt? Or would you prefer to be a good steward? Okay, like you should be, which is nothing but a trustee. Right now, you are a beneficiary of the United States of America, whether you know it or not. There's this thing called Social Security, which is nothing but a trust, and you can Google it. It has 4 trustees. All right, they're going to tell you what you're going to get, if you're going to get, how much you're going to get, and if there's ever going to be a survivor's benefit. All right, so you got to understand the United States of America, understand the power of trust. All right, trust cannot be Googled on any search engine whatsoever possible. Once again, so you maintain privacy, anonymity, and put yourself in a position to defer taxes. And I want you to start thinking about now probate. I want you to start thinking about it serves as a prenup. Who wants to talk to the person that you love about signing a piece of paper that they can't have your stuff in the event things don't work out? So what you do, you trust up, and then you get married. You don't even have to have that conversation. Things don't work out. There's nothing to fight over because those assets are not yours. All right? You can make that person a trustee. If things don't work out, you can remove them. Okay? So it's a beautiful way to live your life, to have a peace of mind, and put you in a position. Now, we have a family trust. The family trust is where your tax benefits are going to be, your asset protection, all right? And that's the most important trust, all right? Then we have an additional trust you get called a business trust. Yes, you can do business in the United States of America with a business trust. A business trust is not part of the Secretary of State. A business trust don't have to do quarterly tax returns. A business trust can do business in all 50 states and not have to file as a foreign corporation. A business trust will be owned by the family trust. Okay, so it's a beautiful situation. It can actually be the manager with the Secretary of State of any LLC, C Corp, or S Corp that you currently have. And you get to take your name off. You get your privacy back. All right, so that's huge about what a business trust can do. All right. It could be the same name of your LLC. All right. So when you do need to do things out of the state that you registered to do business in through the Secretary of State, the trust is the way to go, people. All right. So that's huge in itself. And then lastly, we want to talk about the charitable foundation trust. You know, Donald Trump was a W-2 employee, folks, and he still pays zero in income taxes. Well, he pays $750. Well, how did he do that? Well, he did it by donating to a charitable foundation. So it happened to be a trust that he controlled. His family trust was also a part beneficiary of that trust, and he donated his $400,000 salary to the charitable foundation. 95% of that money went down into the family trust that he controlled. And that family trust is how he accessed the money. All right. And then, but he had to give 5% like in tithes and offering to a nonprofit. And therefore, he was able to zero his W-2 income taxes out. And I also have a foundation that can actually give to people. You know, it's more blessed to give than to receive. But if you ain't got it, you can't give it. We want to put you in a position to have an abundance so that you can give it. All right. And you can really, really, really start to live it. But that's what the spendthrift, non-grantor, irrevocable, complex discretionary trust instrument is all about. And once again, it's over 30,000 people operating this way. Once again, it's been around since 1999. It's been tested, tried, proven. We have case law that say you can't sue the trust, and we also have a lot of people that have completed a lot of tax returns, deferred income taxes, and using that money to grow their wealth. And that's what this is all about. But at this point, you know, a lot of people have questions, and I know I'm gonna give you a lot of answers to your questions. A lot of people say, well, how much does it cost? I said, well, how much is it gonna cost if you don't trust us? You're going to keep going through the things that you're going through and having the fears and not being able to rest in peace, knowing that your family is protected, knowing that you're protected. All right. But it's a one time, one pay, never pay again. The trust started on the family trust is approximately $15,000. If you need a business trust, you're looking at additional probably another $15,000. If you need a foundation, another $50,000. You're looking about $45,000 for all three. Let me tell you something. If you get all three, we discount that. You're able to save about $15,000. All right. So therefore, you're paying about $10,000 per trust. It's a one time, one pay, never pay again. Okay. All right. And you don't have any fees. The only thing you pay for is the tax returns that's going to have to be done. See, the 1041 tax return is going to make the difference. It's going to work in conjunction with your business tax returns and your 1040 personal tax return. And like I said, if all you need is money for food, fun, and fashion, that's what you're going to file on your 1040 tax return. So you get to control what your income is, and now you get to control what's paid in taxes. Look, people, I want to always keep you in a position to qualify for Medicaid. I want to keep you in a position to qualify for food subsidies, called food stamps or card, whatever they call them, and put you in a position to always qualify for housing in the event that you need it. None of us knows what the future holds. You know, there's one thing in life that we can't count, and that's how much time we have left. You can count everything else, but you don't know how much time you have left. So whatever you're going to do, you got to do it today. You got to collapse time frame and compress activity. Whatever you lost, you want to get it back today and start to get more and more and more so you can build a dynasty and leave a legacy for generations to come. And that's what we show you how to do at Trustup. We have a conference once a year. Last year, we had Les Brown, we had Tim Brown, and myself, Cedric Brown, and we also had Dr. Dennis Kimbrough, all right, and a guy named Johnny Wimbrey. You need to Google those names. Those are very important people. They got a lot of wisdom and information, you know, but we're all trusted up, and we want to help you get trusted up. This July the 21st through the 23rd, we're going to have another conference this year. Bishop T.D. Jakes is going to be our main guest speaker. Floyd Mayweather, Roy Jones. I mean, so you know what? We're gonna get a lot done, but we're going to have a lot of fun teaching you what this is really all about as we break down workshops and so on to start helping you build wealth, start helping you get other people's money to get income producing assets. Until you know how to make money work for you while you sleep, you're going to continue to work for money till you die. That choice is yours. It's up to you. But this is what I want to tell you about today. And hopefully I've answered most of your questions. Like I say, we every other Thursday, we give advanced trustee trainings. So I want you to have the wisdom and knowledge to know how to move your real estate assets to the trust with warranty deeds for your particular state. I want you to show you how to move motor vehicles to that trust, you know, with your county motor vehicle departments. I want to put you in position to move your crypto wallet, set up new crypto wallets and move this stuff out of your name and out of business's name so you can avoid the capital gain. I want to show you how to move your business to the trust by using business purchase agreements if it's an LLC. But if a C Corp or S Corp, it's going to be a share purchase agreement. So, you know, I'm giving you a lot of information. And then, you know, but once again, you know, I want to shut up now. And I'm sure your host today that has me here, and I'm glad to be here, may have some specific direct questions. And I'm here to answer those questions and get you more answers to help you make a decision. All right. if you should trust up or not. But if you should decide not to trust up, I want you to consider always continue to trust in God.
Okay.
I'm open for questions.
All right. So I do have a couple questions. One that I know you usually cover in your presentation is regarding loans. So if I need additional money out of my trust, how exactly does that work?
Okay. Keep in mind, people, I say you don't have no one to answer to. This is a discretionary trust. The IRS said that you can take out as many loans from this trust as you need, or you can loan out to others. All right. And when you take out a loan, I would suggest if you need $100,000 to go give to me, for instance, okay, well, you can actually take out a loan with the legal forms we're going to provide to you through lawdepot.com. And you can actually do a loan, say make it a 5-year interest only renewable term loan, and say the interest rate is 3%. So you're going to have to take money out of your salary that we pay you from the trust, 3%, out of your left pocket, I call it, put in the right pocket. As long as you do that, the IRS considers that as a loan. Make it 5-year renewable, and you keep renewing this every 5 years. You keep filing your taxes every year and pay that 3%. The IRS calls it a loan, and therefore, when you die, the trust write those loans off as a bad debt. But you're able to access all that money with zero taxes. That's huge. All right. So, and if you look at the Google the Social Security and look at the trustees, they've borrowed almost about $3 billion from our Social Security fund that they'll never pay back. So that's another way for you to access money. But also keep in mind, whenever the trust needs an asset, instead of you taking money to buy assets, keep in mind, you don't need no assets in your name. You want to avoid probate. You want to be lawsuit proof and judgment proof. And the way to do that is not to own anything. Let the trust own it because he can't be sued. All right. So let the trust buy those assets. You take that LLC, make it lender compliant, pull the money from lines of credit, pay cash for certain items and stick them under the trust. Anything ever go bad, go wrong, hey, you file Chapter 11. All right. But you still have your assets that are in the trust and you still have your good name and your credit that won't be tainted at all. So yes, that's the way that works when it comes to loans. And we can actually coach and help you through that on a day-to-day basis as we're here to help and service you when you call our office during business hours here in Dallas, Texas.
Okay, so you mentioned food, fun, and fashion. So maybe there's 30,000 a year or something like that. Is that considered a salary? So are you like a W-2 employee for your trust? So
you receive a 1099, and and then out of that, $35,000 a year. That's how you go to the beauty shop. The trust don't pay for you to get your hair done. They can take care of the kids' hair and the beneficiaries, but you are the fiduciary. So therefore, your job is to take care of the trust, and you get paid to do that. And you take your own money and buy your clothes, take care of your nails, your hair, and stuff like that. So that's what that's all about. Okay, and that's what you file on your 1040. And you should have enough write-offs to pretty much bring that down as an expense that you're going to have, being a contractor that's managing this trust.
I guess one of my last questions is regarding the EIN. So your trust gets an EIN, and so it can basically operate as a business. How long does it usually take to build up a business credit or like trust credit to start to purchase assets through that trust?
You don't want to build trust credit. You don't want your trust in debt. You don't want to leave that debt to your successor. What you want to put in debt is the LLC that the trust owns. All right. I hope you catch where I'm going now. You don't want to get in debt your personal self, and you don't want to get in debt with the only time I put my trust in debt is if I'm buying and selling real estate, because I have a lot of equity. And when I sell that property, or when the trust sells that property, there's no capital gains, there's no 1031 exchange. Same thing when the wallet for crypto and trading and stuff is in the name of the trust. No capital gains, no 1031 exchanges. But other than that, when it comes to debt, though, let's get LLCs. Let's put all the debt there and let that be the tool that you use to get those income producing assets. Okay, so that's where we teach you how to do that.
I know one of the questions that came up in your trust call this week was around Vice President Kamala Harris, and how just for like a second, there was a conversation about her trust in the news, and then that conversation kind of died. Can you explain why?
Okay, let me tell you about it. If you Google Kamala Harris assets and trust, she's a vice president, and she's with the Biden administration. And right now, they say they are going after people that are not paying their fair share of taxes. And they say, well, she's defying this whole Think about not paying her fair share of taxes. She's worth over $12 million and pays zero in taxes because she's trusted up. And the Biden administration, they're going after like revocable grantor trust. And to get some of that money that a lot of people think that they're trying to hide. And so when they die and then they pass money to, through their estate to the next generation, zero tax. Well, they finna stop that. But yes, they did bring that up about Kamala Harris. But see, you got to understand our senators, our congressmen, our vice president, they all have the same type of trust that I'm talking about. Her trust is discretionary. It's a irrevocable trust. And therefore, they changed that conversation real quick when they start talking about going out. But see, it's only such a small percentage of people that have these type trusts that it's really not a big deal. But they want to go after people that are not trusted up like you, that have LLCs, C corps, and S corps, and like me. All right, because they call us average, ordinary people. We're not supposed to know about sophisticated financial instruments. We're not supposed to know about the 600 and 700 IRS codes. All right, but now you do, because I'm telling you, people. All right, these trusts from a former company that I used to be partnered with. These trusts used to run anywhere from $150,000 to $400,000 per client. But you have clients paying $300,000, $400,000 a year that want that to go away, and they're willing to pay that type of money. But you know what? I put myself in a position, and now I'm in a position to offer that trust for pennies on a dollar. I mean, as less as $15,000, like I quoted earlier. So you can now do what wealthy do. You can now have the foundation. And most folks say, "Well, I don't have enough assets to have a trust." Let me tell you something. Before you get any assets, you want to trust, because you want that trust to be the foundation that owns and builds those assets. You want those assets protected. You don't want to have to go through divorces. You don't have to go through lawsuits. You don't want to have to go through taxes and so on. So now you get to build your wealth a lot faster, using those tax dollars and getting all the chaos out of your life. And whether you live or die, you have things covered. Because we do love our children, and we want them to have a benefit in the event that we're no longer here. So yeah, but that's about with Kamala Harris. But our presidents and vice presidents are telling us what to do. Keep in mind, Nelson Rockefeller, vice president, control everything, own nothing. All right. You've seen Donald Trump and what he's had to go through. All right. You even look at Biden today. You think he's only worth $400,000? What he's making? Hey, believe me, they got trust. Those trusts have millions of dollars on it. With all the different transactions that they've done across, America and outside America. So this is huge, people. I mean, so hopefully I've answered that question for you, though.
Yes, those are actually all my questions for today. I really want to thank you for taking the time. I've been getting a lot of emails about trust, so hopefully those questions are answered. If not, guys, you can definitely reach out to Mr. Brown through Trustup. I think he shared most of that information. I'll also put the information and links in the Dropbox below. Thank you again for your time, Mr. Brown.
Okay, and I just want to leave with you guys. Until the pain to remain the same outweighs the pain of change, you have everything to lose and possibly nothing else to gain. But anyway, trust up, continue to trust in God. I enjoyed you today. Hope to talk to you soon. You can definitely reach out for a one-on-one consultation about your situation to see if this trust is right for you. So thank you for your time today.
All right, thank you.